Good evening, everybody. I'm Pierre Roberge, the Daily Trader. It is January 30th, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions. But I'm not a financial advisor, so please do your own research and make your own decisions. So Tesla is down a little bit today, down $11.24. That's 6.32%, closed at 166.66. Post-market, we seem to be pretty much even, maybe down 6 cents. So let's look at what this looks like on the chart. So as you remember, on Friday, we had a big move, big green candle, lots of force in the stock. Big volume also. Today we opened right where we closed yesterday and we lost a little bit of ground. We did not lose all the ground that we covered yesterday, but we lose maybe 3/4 of it. So this resistance at 176.73 is real. It is back into play. So right now we can say that the stock is into this very new, very young congestion zone. Remember that we opened right here the day after the earnings call. We opened right above 156.33. That's pretty much it. And then went a little bit higher, and now we are coming back down. So we are into this congestion zone. That's what this means. So when we are in a congestion zone, the stock is allowed to zigzag like this, while still being into our bullish channel. The first bullish channel was here. The second one was here. So we are still in the second one. We have not even crossed this support right here. This is telling us that there is some force in this stock. This is a pullback. Let's go see on the 1-hour chart how this played out. So the first candle of the day was right here. So we lost some ground during the first candle. Then we stabilized ourselves a little bit. Then 4 red candles down in a row. And now we have lost stochastic over 60. So this is a great example of how you can understand the interaction between the stock price and the indicators. So we have lost stochastic over 60 on the 1-hour chart. And on the 1-hour chart, if you are playing on the 1-hour chart, I would be using 160 as a support. On the daily chart, it's more what I said, 150. It's more 156.33. But on the 1-hour chart, things are just a little bit different because they are a little bit more detailed. So we came down a little bit, nothing too crazy here. We are expecting the Federal Reserve to tell us what they are going to do with the interest rates. Are they going to increase the rates or not? People are at least expecting a 0.25% increase. But we'll see. If we increase at 0.5, that might be a little bit more iffy for the stock market. If it's 0.25, I think this could be seen as a relief. This is just conjecture. I won't base any of my trading decisions based on this. I'll just be looking at what the stock is telling me. We need to be careful about that. We can have opinions, we can speculate, but we don't have to act on those speculations because this is fluff. Speculation is just fluff. It's just a guess. I don't invest or trade based on the guess. I think Tesla has hit a top. I think Tesla has hit a bottom. I don't trade because of the guess. I trade with what I see in front of me. That's it. So lots of stochastic, RSI climbing down a little bit. DMI is still good. MACD has also reflected that. Nothing too scary here yet. Let's go back on the daily chart. Let's look at our indicators. So still above 60. We have RSI climbing down a little bit. We still have the red line of MACD that's still below 0, and the DMI is still bullish. Nothing too crazy here. It's really rare for a stock to just go up, 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 up. And when you see a red candle, don't necessarily think that this is a new trend. One candle does not make a trend. This is just one candle. And we are looking at the overall pattern, and this is why we are looking at our indicators and also at our support and resistance line. Myself, I'm not worried about Tesla until we break 156. If we break 156, then for myself, I might get out, even though we might still be in our bullish channel because I like my manual stop losses to be very tight. You might have a different way of doing it. We can all have different strategies looking at the very same thing. Losing 156 is going to be the first signal. You can wait until we lose this one. This is a little bit tighter. This can happen a little bit earlier. If you are into profit and want to keep most of it, you can sell at any point. You can sell right now if you want to. You can sell when we break this support right here. You can sell when we break this horizontal support at 156, or you can sell when we break this channel support. You can sell when we break this bullish channel support. So this one is for people that really hang on tight to their money. This one is for people that accept a little bit more risk. And this one is for people that are willing to accept even more risk. So depending on your risk profile, you have the different choices that you can make. Sometimes the less risky decision is the best, and sometimes it's the riskiest decision that's the best. Because if we do something like this, then you are going to be happy if you did not sell until it break this, because it did not break it just bounced on it. So nobody knows what is going to happen. Nobody knows, but these are the decisions that you are faced with. Let's now go look at the VIX. So I am going to look at the VIX, Dow Jones, S&P 500, and also NASDAQ. Within this video, I think it's going to provide you some value. So the VIX had been going down. Remember that? The VIX had been going down, and this was what propped up the stock market. This was one of the reasons. And now we just broke outside of this downward channel. So yes, this is only one candle. We don't have stochastic over 60 yet, but this is an interesting data point. Let's keep an eye on that. Let's look at Dow Jones. So Dow Jones is in a congestion zone. As you can see here, we are in a nice congestion zone. We just lost stochastic over 60. So it seems like we could be coming back down here. And it's okay to come down to 32,874. This is considered noise because basically, as I just mentioned, we are in a congestion zone, and this is what stocks do in a congestion zone. They go up and down. And that up and down move is largely insignificant. It's not a different pattern each time we are going up like this or coming down like this. S&P 500, the S&P caved under 4073. That's SPX. So we have that as resistance. We came very close to breaking it. It would have been nice if it broke it, but maybe what is going to happen with the Fed this week could give us a nice impulse to break it. That would be great. We still have stochastic over 60, so we still have a lot of force in the S&P 500. And then NASDAQ Composite, the same thing. So look at how we got perfectly rejected by 11,674 and are coming down a little bit after this big great move up. This was a great move up, and now we're coming down a little bit. We still have a good stochastics. Let's not be too concerned for now. So thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on my TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.